Right, it is just over half an hour to go till the opening bell on Wall Street. Joining us right now in the markets is Danan Kirby, the client portfolio manager at Ariel Investments. Danan, we've been watching what's been happening with the Bank of Japan. I know you thought the Fed was being pretty hawkish to this point. What do you make of the entire market situation now that the Bank of Japan seems to be throwing in the towel and saying they've got to fight inflation too?
I mean, thanks for having me, Becky. But look, what this is the normalization of things that investors have really been asking for years, right? We've been dealing with a real low rate regime for quite some time, more than a decade, and now things have to normalize, and this is just part of that process. Right now, of course, people are treating the central banks and Jerome Powell like the Grinch who stole Christmas, but it really is just the market having to take its medicine so that we have a healthy economy and can move on into the future. Now, of course, doom and gloom has been pervasive in the markets. You all have talked about that today. But when you actually look at inflation, you look at goods prices coming down, you look at used car prices coming down, you look at basically supply chains normalizing earlier this year, there is room for things to get better. But right now we're in, of course, the normalization process, but that doesn't mean that things can't go well for the economy out into 2023.
Yeah, I guess the question is how much pain is going to be here, which sectors are going to get hit, where do you still find opportunities? Where are you looking right now?
Well, generally speaking, we're long-term investors. We're value investors. We're looking for companies that have been misunderstood, unloved, and mispriced. And a lot of that is found in areas of the marketplace where we have experienced the most pain. But there are some things that investors need to look at and be selective when they're looking for opportunities in this marketplace. So look for companies that have strong brands, reasonable pricing power, and have that experiences over things component that consumers have been looking for since the end of COVID, or into the COVID era, rather.
It does not sound like you're talking about big tech, because if you're looking for serious pain, you can find stocks that are down more than 60% over the last year.
Yeah, well, when it comes to big tech, one of the things that gives me a little bit of caution is that the growth expectations were so high, and it's going to be a long, long time before they can even reach that. And some companies didn't even have sound business models to begin with. So I'm not a big player in big tech right now. I'm more looking for organizations that have been beaten up, where their cash flows are more still in the near term. Talking names like that have been beaten up, like Royal Caribbean Cruise Lines. That's an area that has been right in the crosshairs for all the things that have been giving investors pain or worry over the last, I'd say, year plus, right? But right now, when you look at this organization, it's a company that is on the mend, that's repairing its business model. It didn't even have ships out on the seas for the most part until earlier this year in the summer, where all of its ships and its fleet was able to fully reach capacity. Now, what we have is they've recently come out with an investor day, and there's a lot of good news and stuff in that particular stock. So they're going to look at double-digit earnings power done 2025, right? And they're going, their bookings right now are at, pre-pandemic levels.
Danan, we have like 20 seconds left. One concern would be if the consumer gets hurt hard and stops spending money. That was something Jason Trenner brought up at the top of the hour.
Yeah, well, look, I think you're not going to see that really happen, and consumers have been still remaining strong overall, and they still have some of those pandemic savings, and those things aren't even slated to even run out until, I'd say, the end of the summer in 2023. So the consumer still remains resilient, and they have a much better balance sheet than they had, even in sort of the global financial crisis or that area as well. So things still look bright from my point of view.
Okay, Danan, thanks for joining us today.